Hello, everybody. It's Megan from Sidekick Accounting and your accounting sidekick. And today I am going to be talking about a KPI. We're actually going to be doing a series of digging into different KPIs. And in case you missed my last video talking about KPIs, what they are is a key performance indicator. That's what KPI stands for. And it's actually a really important tool to use as you're trying to grow your business because it gives you something to measure. And you can create KPIs for pretty much anything. But this one that we're going to talk about today is super simple. Not simple. Well, it's pretty simple, especially if you have your books in order. So if you don't have books in order for your business, that's something you definitely need to get on because KPIs really can't be created unless you have financial data to look at that's accurate and up to date. So that is part number one that you definitely need to do. So get your books in order, but if you have your books in order, and especially if you're using QuickBooks Online, I think that some versions of it might not have this capability, but most of them do. And if not, you can definitely do it in a spreadsheet. So spreadsheets are great. Yay, spreadsheets. And if you don't know how to use spreadsheets, let me know because I know somebody who's a fantastic guru at spreadsheets as well. So anyways, today we're going to talk about the net profit margin. And so the net profit margin is basically your bottom line number. So I have a couple of reports here that we're going to take a look at. This particular report in QuickBooks is called the percentage of income report. And this is a really great report because it does all the math for you. And who doesn't like that? So this report does the math for you, and we're going to look at this number down here at the very bottom of your report, and this is called the net profit margin. It is this number down here, this 5.97%, and essentially what it is it's taking. Okay, now I'm gonna screw this up because I didn't write it down. It's taking your net income number, so this net income number, and divides it by your net revenue number, which is going to be this number up here, which is basically your total income, your total sales number is going to be your net profit margin. And but this profit margin is basically telling you is how much profit you're actually getting out of your revenue. And it's a super important number because one, it gives you a really great idea at how well you're managing the expenses in your business. So for instance, if this number is a negative, like this one, so this is a food-based business. These are all just fudged financials, if you will, not fudge, they're pretend, pretend financials. But for instance, this is a net loss. So this particular organization has actually a negative profit margin number. It's minus 2.67, which essentially means that they're spending more than they're making, ideally. So this is a great first level KPI that you can utilize to track your progress on your business and snapshot whether or not it's currently sustainable and healthy. Now, this isn't the end all be all because there might be a perfectly reasonable explanation to why this number is negative. So that's something to consider. But that's the great thing about KPIs is as you track them, you can start asking those higher level, deeper questions that you should be asking as a business owner. So this is one of them, the net profit margin. And if you think about it as a business owner, you can really dig into more of the details and also be able to start tracking your progress. So let's say I'm running this report every month. I should see some kind of pattern, some kind of progression Am I meeting my goals? What were my goals? Are we improving if we're trying to cut back costs? Or is the marketing that we've been doing, advertising marketing, working? Are there costs that we need to cut? Do we need to charge more? All of those different kind of things can really impact why this number looks the way that it does. Are we in mega growth mode? Because if you just hired somebody, or if you added a new product and service, or if you're testing something out, those are all things that might add to higher costs, but should also reflect in the near future, like in the next 6 months or something to that effect, an increase in revenue, which would therefore make an increase in your net profit margin. So those are some things that you can really start to dig into, track, so that you're able to start seeing what's going on with your business, and start asking those questions and start keeping a better eye on it, especially if you have a team that you're relying on, like setting up KPIs that they can then report to you, and help you manage what's going on at a higher level, is ultimately something that you want to do, especially if you're really wanting to grow. So net profit margin, this bottom low number, it's your net income divided by your net revenue. Okay, KPI number 1, fantastic. Let me know if you have any questions. Follow my page. Feel free to reach out if you need help with anything, books or getting your numbers in order, all of that. We take care of all that for you and help you to understand more about your numbers as well. So thanks for watching.